Alright, let's get straight to it. You've put in the hours, you've done the coursework, and now there's one last hurdle standing between you and your real estate career in Colorado, the broker exam. Think of this exam not as a roadblock, but as your official ticket to the big leagues. Passing it on the first try is more than just a confidence boost. It's your first big win in a business full of them. It shows you're serious, you know your stuff, and you're ready to start closing deals and making money. This isn't just about memorizing facts. It's about understanding the rules of the game so you can play it better than anyone else. It's the foundation of your success. I've seen it all in my years of flipping houses and making deals. The difference between a good agent and a great one often comes down to knowing the rules inside and out. The Colorado Broker Exam is designed to make sure you have that core knowledge. It tests your understanding of state laws, contracts, and ethical duties. Why does this matter? Because in real estate, mistakes can cost you and your clients a lot of money. Passing this exam proves you have the professional competence to handle transactions smoothly and legally. It's your license to operate, your shield against costly errors, and your first step toward building a reputation as a trusted, knowledgeable pro. Don't let the word exam psych you out. Every successful person in real estate has been exactly where you are right now. They face the same test, the same questions, and the same pre-test jitters. This guide is your secret weapon. I'm going to break down every section of the exam for you, piece by piece. We'll cover what to expect, what to focus on, and I'll give you some simple tips to remember the tricky stuff. We're going to turn that mountain of information into manageable molehills. You're not just studying to pass a test, you're preparing to launch a successful career. So take a deep breath. You are more than capable of acing this exam. The key is to study smart, not just hard. This means focusing on the high-impact topics, understanding the concepts behind the rules, and walking into that testing center with a clear plan. Forget about cramming everything the night before. We're going to build your knowledge brick by brick so that on test day you're not just guessing, you're executing. You've made it this far and the finish line is in sight. Let's get you across it so you can start cashing those commission checks. First up, let's talk about the people who make the rules, the Colorado Real Estate Commission. This section of the exam has about 8 questions, and it's all about who they are and what they do. Think of the commission as the referee in the real estate game. They're there to protect the public and make sure all brokers play fair. The commission is made up of 5 members. 3 are real estate brokers with at least 5 years of experience, and 2 are members of the public who are not in the real estate business. This balance ensures that the rules are practical for brokers, but also fair for consumers. Their main job is to create and enforce the rules we all have to follow. So what kind of power does the commission have? They can investigate complaints filed against brokers. If they find a broker has violated the rules, they can issue punishments. These can range from a simple letter of warning to bigger penalties like fines, license suspension, or even taking your license away for good, revocation. They also have the authority to approve real estate schools and courses like the one you just took. It's crucial to remember that the commission does not handle disputes about commissions or fees between brokers. That's something for the brokers or their associations to sort out. The commission is strictly focused on license law violations. Here's a key detail you absolutely must know. The commission promulgates rules, which means they create and publish them. These rules are known as Rule E for ethics, Rule F for forms, and so on. They have the force of law for all licensees. One of their most important duties is managing the licensing process itself. They set the requirements for getting a license, renewing it, and what happens if you let it expire. You'll need to know that they can audit your records, and they have the power to seek an injunction from a court to stop someone from practicing real estate without a license. Think of them as the ultimate authority in your professional life. To keep it simple, remember the commission's big 3 jobs: licensing, rulemaking, and enforcement. They issue your license, they write the rules you must follow, and they punish you if you break those rules. They exist to protect the public from incompetent or dishonest brokers. When you see a question about the commission's purpose, the answer will almost always relate back to public protection. Don't get bogged down in the tiny details of their internal meetings. Just focus on their role, their powers, and their structure, the 5 members. That's the core knowledge you need to nail these questions and move on. Now let's talk about you and your license. This part of the exam has about 13 questions, focusing on how to get your license, keep it active, and what happens if you don't. The first thing to lock in your brain is the education requirement. 168 hours of pre-licensing education. That's the magic number that gets you in the door. After you pass this exam, and you will, you'll also need to get your fingerprints taken for a background check and secure errors and omissions insurance. E&O insurance is mandatory in Colorado. It's your professional liability insurance that protects you if you make a mistake that costs a client money. Once you have your license, you can't just set it and forget it. Your broker license expires on a 3-year cycle, and the deadline is always December 31st of your expiration year. To renew it, you need to complete 24 hours of continuing education. Here's a memory trick. Think 24 hours for 3 years, and within those 24 hours you must take the 4-hour annual commission update course every single year. So that's 4 hours per year for 3 years, totaling 12 hours. The other 12 hours can be in various approved elective courses. Forgetting the ACU is a common mistake that can get you in trouble, so burn that into your memory. What happens if your license is inactive or expired? An inactive license means you've met the educational requirements, but you are not authorized to practice real estate, usually because you aren't affiliated with a brokerage. You can't earn commissions with an inactive license. An expired license is more serious. If you fail to renew on time, your license expires. You have a 31-day grace period after the December 31st deadline to renew without penalty. After that, you'll face extra fees. If you wait too long, more than 3 years, you might have to retake the state exam all over again. Nobody wants that, so stay on top of your renewal dates. Finally, let's talk about different types of brokers. As a new licensee, you'll be a broker associate. This means you must work under an employing broker. The employing broker is the boss of the firm and is responsible for supervising everyone who works there. You cannot practice real estate independently until you upgrade your license, which requires experience and more education. Also remember that a brokerage firm itself, whether it's a corporation or LLC, must also have its own license. So both the individual brokers and the company they work for are licensed and regulated by the commission. This is a big one. The section on licensee activities covers the day-to-day rules of being a broker. Expect around 20 questions here, making it one of the most important parts of the exam. This is all about what you can and cannot do when you're helping clients buy, sell, or lease property. The number one rule to remember is that you have a fiduciary duty to your client. This means you must put their interests above everyone else's, including your own. This includes duties of loyalty, obedience, disclosure, confidentiality, accounting, and reasonable care. These are not just suggestions, they are your legal obligations. A huge topic here is advertising. The rule is simple. All your advertising must be done in a way that is clear, honest, and not misleading. Most importantly, you must always include your brokerage firm's name as it is registered with the commission. You can't just run an ad with your name and phone number. The public needs to know which company you work for. This applies to everything: yard signs, business cards, websites, social media posts, you name it. Misrepresenting yourself or the property is a serious violation that can lead to disciplinary action. Always tell the truth and be transparent in your marketing. Another critical area is handling money, specifically other people's money, like earnest money deposits. You must deposit these funds into a trust account immediately. In Colorado, immediately means no later than the 3rd business day after you receive the money and the contract is accepted. You can never mix this money with your own personal or business funds. That's called commingling, and it's a major no-no. Your employing broker is ultimately responsible for the brokerage's trust accounts, but you need to know the rules for handling funds properly from the moment a client hands you a check. Finally, let's touch on payments. You can only be paid for real estate services by your employing broker. You can never accept a commission, bonus, or any other form of payment directly from a client, a title company, or another brokerage. All money must flow through your brokerage firm first. The firm then pays you according to your independent contractor agreement. This rule prevents shady side deals and ensures that your employing broker can properly supervise all transactions. Remember, your broker is your only source of payment. Following these rules will keep you out of trouble and build a trustworthy reputation. Alright, so this section is kind of a catch-all, covering a bunch of important rules and concepts you really can't afford to miss. You'll probably see about 6 questions on these topics, so even though it's not the biggest section, every single question counts. One of the key areas here is Rule E13, which deals with sign crossing. Basically, you can't negotiate a sale or a listing with a consumer if you know that they already have an active, exclusive agreement with another broker. For example, if you see a for sale sign in someone's yard, you can't just walk up, knock on the door, and try to convince the seller to list with you instead. That's considered poaching someone else's client, and honestly, it's a serious ethical violation. Another important topic is the Conway-Bogue case. This is a pretty famous Colorado court case that gave real estate brokers the limited right to practice law. So, what does that actually mean for us? Well, it means that we're allowed to fill in the blanks on standard, commission-approved contract forms. But, and this is really important, we can never draft our own legal documents or give legal advice. If a client asks you something like, how should we take title to the property? Your only correct answer is, that is a legal question, and you should consult an attorney. Here's a simple memory trick. Brokers fill blanks, attorneys give advice. Sticking to this will keep you out of some serious trouble. You'll also need to understand the rules around square footage disclosure. In Colorado, brokers are not the actual source of square footage measurements. We can provide information from what's considered a reliable source, like the county assessor's records or maybe an appraiser's report, but we have to state the source. The broker is responsible for indicating where the measurement came from, not for guaranteeing its accuracy. The official square footage disclosure form is used to make this clear to buyers. The main goal here is to make sure buyers don't rely on the broker for this specific data point, and it pushes them to verify it themselves if it's important to them. Finally, this section covers your duties related to property inspections and disclosures. You have a duty to disclose any adverse material facts you know about a property. An adverse material fact is basically something negative that could impact the property's value or a buyer's decision, like a leaky roof or a cracked foundation. This duty exists, even if the seller tells you not to disclose it. You work for the client, but your duty to be honest and not commit fraud is absolutely paramount. Always disclose what you know. This protects the public, protects you from lawsuits, and honestly, it's just the right thing to do. Get ready to become an expert on paperwork. This section is huge, with about 22 questions, making it the largest part of the state exam. It covers the commission-approved contracts and forms that you'll use every single day. The key here isn't to memorize every word of every form, but to understand the purpose of each one and know where to find important information. The most important form is the contract to buy and sell real estate. You need to know what all the major clauses mean, especially those related to dates and deadlines, contingencies, and remedies for default. A critical concept to master is the dates and deadlines section of the contract. This is the roadmap for the entire transaction. You'll need to know what happens at each deadline, such as the loan application deadline, the inspection objection deadline, and the appraisal deadline. Missing one of these deadlines can have serious consequences for your client, potentially causing them to lose their earnest money or even the house itself. The exam will test your understanding of this timeline. A great way to study is to take a blank contract and walk through a hypothetical transaction, filling in the dates and thinking about what each one means for the buyer and seller. Another key area is understanding the different brokerage relationship forms. Before you start working with a client, you need to establish your relationship in writing. The exclusive right to buy listing contract is used for buyers, and the exclusive right to sell listing contract is for sellers. These contracts define your duties and how you will be paid. You also need to know about the brokerage disclosure to buyer-seller form, which explains the different types of relationships available in Colorado, like a seller's agent, a buyer's agent, or a transaction broker. A transaction broker is a neutral facilitator who assists both parties but doesn't represent either one as an agent. Finally, you must be familiar with addenda and countermeasures. An addendum is something you add to a contract to include additional terms. A counterproposal is used when one party wants to change the terms of an offer they received. For example, if a buyer offers $500,000, but the seller wants $510,000, the seller would issue a counterproposal. It's crucial to know that when you make a counterproposal, it kills the original offer. The buyer is then free to walk away. Understanding the flow of offer, counteroffer, and acceptance is fundamental to contract law and a big part of this exam section. Let's talk about keeping your files in order. This section has about 10 questions and focuses on two critical responsibilities: maintaining proper records and managing trust accounts. The rules here are strict because they are designed to protect clients' money and create a clear paper trail that the commission can audit if needed. The first big rule to memorize is the record retention period. In Colorado, you must keep all records related to a real estate transaction for 4 years. This includes contracts, closing statements, disclosure forms, and correspondence. These files need to be available for inspection by the commission at any time. The heart of this section is the trust account, also known as an escrow account. This is a special bank account where a brokerage holds other people's money, like earnest money deposits or rent payments. The employing broker is responsible for this account. There are very specific rules for these accounts. For example, the account must be in the brokerage firm's name as registered with the commission, and it must be clearly labeled as a trust or escrow account. The bank must be located in Colorado. These rules prevent any confusion and ensure that client funds are kept separate and safe. One of the biggest sins in real estate is commingling. This is the illegal act of mixing trust funds with the brokerage's own business or personal funds. For example, you can't deposit an earnest money check into your company's operating account to cover payroll. The only money the brokerage is allowed to have in the trust account is a small amount to cover bank service fees. The other major sin is conversion, which is even worse. Conversion is when you use trust fund money for your own purposes. This is essentially theft and will lead to swift and severe punishment, including losing your license and facing criminal charges. To manage trust accounts properly, the employing broker must maintain a detailed record-keeping system. This includes an account journal that shows all deposits and withdrawals in chronological order. They also need a ledger for each individual transaction, tracking the money for that specific deal. These records must be reconciled monthly. While you, as a broker associate, may not be managing the account directly, you are responsible for knowing the rules. You need to know how to properly deliver funds to your broker and understand the importance of this system for protecting the public. This knowledge is essential for passing the exam and for being a responsible professional. Welcome to the finish line of a deal, the closing. This section of the exam will have about 8 questions testing your knowledge of the closing process and the financial settlement. The closing is where ownership of the property officially transfers from the seller to the buyer. It's also where all the money changes hands. As a broker, your job is to make sure everything is accurate and that your client understands all the documents they are signing. The most important document at the closing table is the closing statement, which provides a detailed breakdown of all the money involved in the transaction. You need to be comfortable with the basic math of a closing statement. This means understanding debits and credits. A debit is a charge, an amount of money you have to pay. A credit is an amount of money you receive. For example, the purchase price is a debit to the buyer, they have to pay it, and a credit to the seller, they get to receive it. Property taxes are often prorated, meaning they are split between the buyer and seller based on the closing date. You'll need to know who pays for what. Typically, the seller pays for the taxes up to the day of closing, and the buyer pays from the day of closing forward. One key law to know is the Real Estate Settlement Procedures Act, or RESPA. This is a federal law that applies to most home loans. RESPA was created to protect consumers by requiring lenders to provide clear disclosures about loan costs and by eliminating kickbacks. A kickback is an illegal payment for a referral. For instance, a mortgage lender cannot pay you a finder's fee just for sending a client their way. This ensures that you are recommending services based on what's best for your client, not based on who is paying you under the table. RESPA helps make the closing process fair and transparent. Finally, you need to know who is responsible for the accuracy of the closing statement. In Colorado, the broker is responsible for ensuring their client receives an accurate and detailed statement. Even if a title company prepares the documents, you are expected to review them carefully and make sure they are correct. Your job doesn't end until your client has signed the papers and the deal is officially closed. A good memory tip for this section is to think of the closing as a final accounting. Every penny must be accounted for, and your role is to be the diligent and knowledgeable guide for your client through this final, critical step. We've covered a lot of ground, from the big picture rules of the commission to the tiny details on a closing statement. Now it's time for the final push. As you prepare for test day, I want you to focus your energy where it matters most. Go back and review the sections with the most questions. licensee activities with 20 questions, and forms and contracts with 22 questions. Together, these two sections make up more than half of the state-specific exam. If you can master the rules of daily practice and the flow of the main contract, you are building a massive lead before you even walk in the door. Don't get lost in the weeds on smaller topics. Make these two your strongholds. Here's a quick checklist of the absolute must-knows. Run through this list a few times before the exam. Know the 3-year license renewal cycle and the 24 hours of continuing education required. Remember the 4-year record retention rule. Burn the 3rd business day deadline for depositing earnest money into your brain. Be able to distinguish between an agent and a transaction broker. Understand that you fill in blanks, you don't give legal advice. And never forget that all advertising must include your brokerage firm's name. These core facts are the easy points you can't afford to miss on the exam. They will come up, so be ready for them. On the day of the test, your mindset is everything. Don't rush. You have plenty of time, so read each question carefully. Sometimes one word can change the entire meaning of the question. Eliminate the answers you know are wrong first. This often narrows your choice down to 2 options, dramatically increasing your odds of getting it right. If you hit a question that stumps you, mark it and move on. You can come back to it later. The last thing you want is to waste time on one tough question and run out of time for 10 easy ones at the end. Stay calm, stay focused, and trust the studying you've done. You are ready for this. You've put in the work, you have the knowledge, and you have the drive to succeed. This exam is just a formality, a final checkpoint on your path to a new career. Walk into that testing center with confidence. Visualize yourself walking out with a passing score. Think about that first deal you're going to close, the first commission check you're going to earn. This is the start of something big for you. I've built my success on taking calculated risks and knowing my market inside and out. This exam is your first step to doing the same. Now go out there and crush it. You've got this.